Anecdotally, there seems to be a bit of a stampede toward fixing home loans. People are obviously worried about rising interest rates. Are you worried about people defaulting on their home loans as we see interest rates rise?
Look, I don't have a worry about the default rate. As long as the people have a job, there's a propensity for them to continue to pay their interest rate and their mortgage. But what we have seen for 11 years now, we've had interest rates going down, and you're now seeing the interest rates, particularly fixed rates, starting to drift up again. Most customers have a buffer and they've been overpaying on their mortgage, i.e. paying more against their principal than they would have normally, because as interest rates have dropped, we've given them the option to actually just keep paying the same amount that they were before. So they've built up a buffer within their mortgage payments as well. Our own book shows that at least 70% of our customers are well in advance of their payments. And when I say well in advance, we've got about an average of 4 years of advance payment across the average of our book, our mortgage book. So the customers are in pretty good shape. We also, when we give them a mortgage, we don't take the interest rate that they're actually being paid as the rate we think that they can afford. We add a buffer on top of that, which is an additional 3% now against that mortgage, to say if they had an interest rate rise, would they be able to afford it? So we are doing a lot of testing with customers to make sure that they can afford it, even though interest rates are higher than they are at the moment.
There will, of course, have been a lot of people, particularly in the last 2 years, who've stretched themselves because lending conditions were more in their favour. I'm thinking first home buyers here. How will they cope?
Well, I think the first thing, if they are starting to feel that they may have difficulty, talk to their banker. And I think that's really important. We can do things early with them and help them out as long as we get the notification and they don't get themselves in a bad position. What we found through COVID even, people were reluctant to pick up the phone, and the best thing they can do is pick up the phone and talk to their banker so we can actually be helpful to them. But if they leave it too late, it leaves us with limited options. The vast majority of people are in a very good position with their home loan. We're not seeing any stress coming through our book, through our loans for our customers at the moment. We're not seeing the stress, which is a good sign. And the biggest factor of paying down a mortgage is around having a job. And at the moment, we're seeing in Australia unemployment levels at the best for decades. So I think the signs are still very good.
When do you think the RBA will start lifting interest rates, and how high will they go?
Our view is probably the latter half of this year that the Reserve Bank will start moving. But at the moment, interest rates on fixed mortgages have already moved, because for us to give somebody a fixed rate, we're not just borrowing off depositors, we're actually borrowing out of wholesale markets, and that money for us has actually increased in price. So that's being passed on through fixed rates for customers. So you're already seeing fixed rates moving, and I think later in the year you'll probably start seeing the variable rates move. But again, it's been 11 years of coming down, and at some point in time, rates go the other way as well, and we're starting to experience that.
What do you think the official cash rate will be by the end of the year?
Look, I think it's probably going to be about 50 basis points up, but we'll leave that to the Reserve Bank to work it through.
House prices continue to increase nationally, up 22.4% last year. Is it going to stop?
Well, it's been an extraordinary rise in house prices right across Australia, and it hasn't just been cities, it's been in the rural areas as well. We can't see another 20-odd% this year. You actually run up against customers can't afford to pay the mortgages on these, so it starts to put a ceiling in place. We see this year probably rises in house prices about 5 or 6%, and let's wait and see what happens in 2023. But it certainly can't see another 20-odd% rise this year.
Ross McEwen, thanks for your time.
Thank you very much. Cheers.